Hi everyone, this is Colin Ken. Okay, despite everything happening with the economy, with the stock market and crypto going like this, and inflation and interest rate going like this, despite all that, median home price in King County has hit an all-time record high again at $995,000. At the time of making this video, sitting here in May of 2022, I can't believe the words that are coming out of my mouth. Like, median home price for a single family resident here in King County is hovering around $1 million. With all the news and media going on, with the inflation in the economy, the stock market correcting itself, and seeing my own personal stocks in Amazon, Tesla, and other, like Netflix, all going down 30% or more, yet here real estate has hit an all-time record high again. Like many of you that are watching this, I'm kind of lost for words too. So rather than just giving my opinion about the market, let's take a look at some real data and facts, what we're seeing with the current real estate market here in the area. The median price of a single family resident in May of 2022 is currently around $995,000 versus this time last year in May of 2021, the median price point was around $840,000. That's a $155,000 increase year over year. Currently, the average days on the market in May of 2022 is hovering around 7 days versus the average days on the market in May of 2021 was 11 days. However, the time for months of inventory has doubled in the last month, and that's one thing we gotta take a note of. So what is the months of inventory? It's a relationship of numbers of home sales versus the number of homes currently available on the market. So let's say no additional homes were added to the supply of homes currently that's available. It would take this long to sell all the available homes that are currently available on the market. In March of 2020, the months of inventory was about 0.3 months or about 10 days. Today, it's double to 0.6 months or about 20 days. However, if you look at months of inventory in April of 2021, it was 0.5 months, and in April of 2022 is 0.6 months. Overall, it's not a lot of changes with regards to the months of inventory if you look at it from a year-over-year standpoint. With the media putting fear that the market is going to correct or prices are going to drop or even crash, we're looking at real numbers here today, and it seems like the real estate market is still trending along. And it's true that there are more homes with price reduction now than this time last year. Some of this probably was caused by home sellers that were overpricing their house. Or, I would say, real estate agents that weren't being realistic with their home sellers with their pricing strategies. Here's the other big change that we've all seen with the real estate market. Mortgage interest rate. Yes, the fact that mortgage interest rates are hovering at 5.25%, 5.5% for a 30-year fixed mortgage today versus 1 year ago is at 3.5%. A very interesting article in Fortune magazine last month interviewed Zillow about what they thought with the real estate prices in the years to come. Well, for now, Zillow seems pretty optimistic about real estate pricing and still see a future growth in the years to come. One factor is the demand for millennial buyers. Zillow believes home buyers' demand will continue as millennials enter to the marketplace, which will continue to outmatch the supplies of homes available. And Zillow is forecasting that real estate prices will most likely increase 14.9% between March of 2022 and March of 2023. As Fortune magazine even wrote, even if Zillow's forecast proves to be wrong, Zillow is highly skeptical that home prices could fall by much. Because if prices did fall, well, we know that there are still millions of first-time home buyers or younger millennials waiting to snap up homes if they see a bargain in the marketplace. So, there are many articles right now that are talking about how the market's going one direction, while others are talking that they're going the opposite direction. Some articles are predicting that there's going to be a crash. Well, and some articles are saying they're going to go up 14% by next year. Personally, with my perspective of home ownership, if I had the choice and the financial means to purchase a home, I'd rather be a homeowner than renting a home in any market and in any interest rate. And I'm simply coming from a long-term outlook and perspective in investing. Oftentimes, I'm tempted like everyone else. I want to play the short-term financial gain because that's the world we live in, with instant gratification. We want it now. However, with many aspects of investment and other parts of my personal life, I've always noticed there's always a huge benefit to playing the long-term game. And this is just to share my own personal experience. Alright, I bought a home here in King County in Washington back in 2009. I know, that's a long time ago. And at that time, I purchased a home for $350,000. And within the first year of me purchasing that first time home, the value of the house went down to $320,000. And I remember saying to myself, why did I just do that? Like, why on earth did I just not continue to rent? Why did I go buy a home? However, even in that particular scenario, the payment on my mortgage after the first year, with the mortgage interest and tax saving, my mortgage payment came out to be a little bit over $300 more than what I was paying for rent. So it made sense. I mean, overall, I didn't mind if the market was going up, down, left, right. I simply knew that I was going to pay off this house in 23 years. So I know that at the end of it all, after 23 years, I at least have a $350,000 asset at the end and good tax write-off along the way. And hey, in 23 years, I won't have to pay rent each month and not have a mortgage payment anymore. That's all. How great. Fast forward 12 years, I recently did a home refinance at the end of last year on that same exact house that I purchased back in 2009. And you know what? The appraisal value for that home came in at $935,000. So when someone looks at that house and say, wow, Colin, you got this for $350,000. You're a genius. Not really. When I purchased the home back in 2009, I lost 30 grand in equity within the first year of buying that house, because the house was worth only $320,000 in 2010. And realistically, I was no genius. I just did what I felt right, which was thinking about real estate investment as a long-term perspective. And I was kind of tired of paying rent. The point of the story is, think of it as a long-term investment when it comes to real estate. As a home seller in today's market, if you've gotten your home back before 2020 or 2019, and you've seen a good amount of appreciation, which I'm sure you all have, and now you're selling to take your chips off the table or invest in something else? Let's face it, you've most likely doubled on your initial down payment on that house or your investment within the last few years. So cashing out might be perfectly right, or it all depends on what you do with the proceed at the end of the sale, which we can talk about in another video. Once again, thank you for viewing this video. If you have any questions with regards to buying or selling a home in 2022, please feel free to reach out to our team privately. We'd be more than happy to help you with your housing needs. Once again, stay safe, have an amazing week, and take care, everybody. See you later.